Hey, it's Elliot, and in today's video I'm going to show you exactly how to read and understand Japanese candlestick charts. So let's go to the desk and I'll show you this. So here we have our candlestick chart. So the first question I'd like to get answered is, why the fuck do we use this and we do not use, let's say, a line chart? Okay, why do traders continue using candlestick charts? And the reason for that is we have data. Candlesticks give us information inside the selected time frame. So what does that mean? So you can see that here I have dollar CAD. So this is what I'm looking at. It's the value of the US dollar against the Canadian dollar, right? But I could be looking at Apple, I could be looking at a stock, at a bond, at a commodity, whatever. And here we can see that we have the time frames, okay? So you have a 1 hour, 2 hour, 4 hours, and right now we are looking at a daily time frame. So each single point on the market is 1 day. So you can see that each candle is equal to 1 day. Each candle represents 1 day. So that's the first way to see it. And looking at the line chart, it's the exact same thing. You can see that the line chart moves in ticks, okay? So we can see this point, then this point, and this one, and this one, and this one. So these are closes. These are the closing price of each single day, okay? So if we look at here, that was the closing price, and we look at the candlestick, you can see that indeed that was the closing price, all right? So what information does these candlestick give us that the line chart does not? So we need to look at the basics and understand what's the formation of a candlestick first. So here are the basics of candles. So to make it super simple, if a candle is blue or green, that means it was positive on the time frame selected. So remember, previously we looked at the daily time frame. So each candle is 1 day. That just means that the day was up, okay? We ended the day positive. Now this just means the day was negative, all right? Now what exactly the candle gives us more as information? So we know that this day was positive simply because the bottom, so first of all, the candle is blue or green, and the bottom of the body, so this is what we call the body, is the opening price. So at the beginning of the day, market started trading here, and closing price is here. However, during the day, price went all the way up here, so that's the high, and went all the way down here, that's the low. Now, if the day was negative, it's the exact same thing. So price opened, let's say at 110, okay? Then we ended the day at 109, okay? However, during that day, we went all the way down to 108.50, and we went all the way up to 110.50, okay? But that basically gives us the information for that specific day. So let's see some examples. So let's say we are looking at a daily time frame again, okay, just to make it simple. So this is the start of the day, this is the end of the day, and price started here, okay, let's say 110, and these were the movements of the market, okay? So this is if we look at an intraday chart and we ended the day here. So what would the candle look like? So this was the opening price, correct? So this is the opening price. Now this is the closing price, which is right here, okay? So overall the candle we can say is red, okay? The overall for the day has been negative, okay? So this is a nice bearish red candle. And now the wicks, okay? So we can see that this was the highest point for the day, so that would give us a wick right here, and this was the lowest point for the day, so that would give us a wick like this. So the candle for this day would look exactly like this. Now let's look at another example. So we are now looking at a 4-hour time frame, so each candle is worth 4 hours. Now in that hour we had price literally do this. So we opened the first 4 hours, okay, right here, and then price basically did this, okay, and closed right here after the 4 hours. Now what would the candle look like? So as we know, we have the opening price here, so that's the open, and the closing price up here. So is that candle bullish or bearish? So is it blue, red, green? Obviously it's bullish, okay, so it's a blue-green candle. So we have this, and looking at the wicks, so this was, as we know, the lowest point for the day. That was the highest point for the day, so there's actually no wicks, okay, no wicks. So what does that tell us? That tells us there's a lot of buyers, okay, and we can literally see it for the day. There has only been buyers for the day. So this is a very bullish candle, okay? It just signifies that there are a lot of buyers on the market, okay? Now on the opposite, if we opened the day right here and we had some buyers taking the price all the way up here, and then sellers basically coming in aggressively and closing around here, okay, after the 4 hours, what will the candle look like? We have the open here, the close right here. So the candle's body would look something like this. However, the wick, okay, so we know that that's the actual lowest point, fair enough. However, this is the highest point, okay? So the wick would be all the way like this. And this type of candle definitely signifies and shows us that there is selling pressure, okay? So if we just had a line chart and we just had a point, we have no clue, we don't have that information. However, looking at such a candle, okay, with such a long wick, shows us that there is selling pressure, okay? That end of 4 hours has been very bearish and sellers have been coming in. So now let's look at real markets. So this is dollar CAD on the daily chart. So if we look closely, you can see that this is the same principle. For instance, we've been coming down here and you can see this candle. So this was on the 1st of September. So price open right here, so at 130.48, okay, and we closed up here, so at 130.64. Now, during this day, price went all the way down there, but came back to actually close positive. What does that show us? Definitely that there is buying pressure, okay? Buyers took the price from here, so basically the 130 key level, which is a round number, and pushed the price all the way up. What we are seeing here, very similar as well, okay? We can see that right here, we had the wicks. So every time price is coming up, we have sellers taking it down, and the candles are closing and opening and closing at this very specific price, and just volatility is taking it up there. Same here, okay? That's very significant. We can see that price opened and closed basically at the same exact price, which was 133.23 3 days in a row. Okay, so for 3 days in a row, technically price has not moved during the day, okay, from the open to the close. However, every time it went up, we had strong sellers pushing this down. And what did we see later? Actually selling pressure coming in, okay? We are seeing this as well. Similarly, the last few days, this was caused recently with the Pfizer news. So yeah, very interesting stuff. Now there is an image I like to use for you to understand exactly how these candles work and to understand the selling and buying pressure. And this is my image is exactly this one, okay? So literally you need to imagine these wicks as a toe that's just seeing how what the temperature is, and does it like the temperature or does it not, okay? And this is exactly the case right here. So we can see price came all the way up, tested basically the 133.900, didn't like that area at all. Sellers came in aggressively, pushing price all the way down. So exactly that image of the toe, tested that level and did not like it. So if this image was an actual candle, it would look like this, okay? We have the opening, we have the closing price. However, during that day, during that time, the toe went to test these 110 level. This is causing the wick. So it just shows us that sellers came all the way to 110, buyers did not like that zone, okay? The price did not like that zone and rejected it right away to close, basically to come back where it was originally, so in the shoe, okay? So this is the way you need to think of it, and the way to read candles is to always understand who is in control of the market. So when you see such a wick, that just tells you, just think of that image, okay? I can't put it in a better way, just think of that image, the toe testing, okay? It does not like that level, so it just retraces right away. So I really hope you found this video useful. Down in the description, I've left the link to my mentoring program in which I teach you exactly how to trade from A to Z and step by step. I really cut the fluff. I show you how I personally trade. Everything is made out of screen recorded video, so you can actually see what I'm doing, just like this video. So everything is made in a practical way, not only theory. We look at basically everything that is important. We go from psychology, a very deep risk management. We go through analysis, but analysis, that's not the only thing. So we look at actually converting that analysis into profits, so the trading side of things. We look at, you'll be able to download many tools, Excel sheets that I've created and use for your own personal trades. And you'll also have access to the Slack workspace, so the community group in which you'll basically have assistance, direct access to me, to all the other traders. So a very, very powerful group. But anyway, remember to smash the like button if you enjoyed this video and to go subscribe to the channel. See you in the next video.